Gerald with Oak and Key Real Estate, and today I'm sitting with Jesse Malek from Axiom Mortgages. Jesse, we had coffee a couple days ago, and something came up in the conversation I thought was really clever. You mentioned the cost of waiting.
Yeah, first off, hi everybody. So one thing that I'm seeing a lot of lately is a lot of people saying, hey, I want to wait till rates come down. And I think that's partly because we had these low 2% rates for a very long time, or well, kind of a couple years here. Yep. So I think a lot of people are kind of waiting for that to go back down. But unfortunately, what I think a lot of people are missing is that by waiting, you are losing a lot of opportunity cost here. So for example, Royal LePage said that they came out with a report that said that they think that housing is going to go up by 8.5% for the year. So let's look at a $500,000 house. If you wanted to buy that $500,000 house back in January, but you were waiting for rates to come down, well, by the end of the year, that $500,000 house is now going to be $542,500, right? Yep. Which means that you're going to have more money saved for your down payment. Your closing costs are going to be a little bit higher. And I mean, you missed out on $42,000 worth of equity that you could have had you bought that property in January.
Free equity.
Exactly, right?
Yep.
I mean, anytime you can add some equity is great, right? So buying now versus waiting is always the better option. I mean, what we like to say is you're gonna either nail the rate or the purchase price. You're not gonna nail both. And the reason for that is they're inverse relationships, right? As soon as rates go down, the prices start to go up. If rates go up, prices come down a little bit, which we saw over the last 12 months, and we're starting to see the prices go back up. So
yeah, it's a little bit like supply and demand, right? When there's tons of demand, it's going to affect
absolutely
the supply, right?
Absolutely.
And so with that in mind, I guess conversations I've been having with buyers and sellers right now is, and I think a lot of people are feeling this pain. Anyone who's working from home is maybe a little less so, but the amount of construction that we've seen in London and St. Thomas lately, and the announcements of the Volkswagen plant and all there's a lot of upside in the region, which leads me to believe, and maybe I'm wrong, but I think I'm pretty confident saying this, the region's going to continue to be growing over the next number of years.
Absolutely. I mean, London is just a completely booming city. There's so much going into the area, and all that construction, once it is done, I mean, it's a pain in the butt right now, but once it is done, it will be a much nicer city. It'll be much easier for people to get around. People are going to want to live here, and like you said, the Volkswagen plant, and we got the new Amazon plant as well, which isn't fully up and running, but once those are, I mean, that's going to be a lot of new jobs and a lot of money coming into the city.
Yeah, a lot of demand, I would say, right?
Absolutely. I mean, all those people are going to have to live somewhere, and if you get a higher paying job, obviously you want to increase your lifestyle and maybe go from renting to buying.
Yeah, and so would it be fair to say, and like this is just a personal opinion thing, but if you're renting a home, and let's say it's a great home, you're renting a beautiful home right now, you might have a down payment for something small, and maybe you would sacrifice a little bit of the lifestyle in the short term, but you would be paying yourself first and building equity towards your trophy.
Yeah, absolutely. I'm glad you brought that up, because a lot of people I find are they want to move into their dream home right away, or they want that perfect house that they love, which I completely understand, right? If I'm going to buy a house, I want it to be everything that I want it to be. However, if you're just getting into the market, if it's your first home that you're buying, buy the cheapest one you can find that you can afford. If it needs some renovations, put that work in, right? There's an old adage that says, buy the worst house in the nicest neighborhood, right? Because that house you're going to get for a much cheaper cost. You do some work on it, and now all of a sudden you've caught back up to those other houses in your neighborhood, and you've added a ton of equity, which then if you were to sell, or you then can use that equity to buy that dream home that you want, right?
Yeah, and I mean, if you were to take that home that's maybe, let's call it the worst home on the street, and put it in a different neighborhood, it's going to bell curve to what the average in that neighborhood is. If
Absolutely.
You can find a kind of like the home that needs that work in a great neighborhood on a great street, it's going to bell curve it up.
Yeah, I mean, a lot of people look at that as like flipping homes, but I mean, you don't have to be a home flipper, right? You can buy a house that needs some renovations, live in it. You're renting from yourself technically. You're no longer paying a landlord. You're paying down a mortgage. That's building equity. You are benefiting from the increase in the home prices. So, and then once you've got all those renovations done, you've just now put yourself back to par with the other homes of that neighborhood.
Amazing.
One quote that we always kind of like to say is, marry the purchase price, date the rate.
Yes, I've heard that. That's a good one.
So you can always refinance the rate if rates come down, but you can't refinance, or well, you can refinance, but you can't change that that purchase price, right?
Yeah, it's after you move in, it's kind of hard to go back to the old sellers and be like, you know what?
Yeah, exactly. Can I get 50K off? No, it makes more sense to try and find something that you can buy the cheapest cost right now, and don't worry about the rate. The rates will do what they want to do and what they need to do, and we've got plans to figure out how to manage that for you.
Amazing. Well, thank you so much. And how do people get in touch with you?
You can just give me a call at 519-870-3503, or if you prefer the social media method, just look me up at Jesse Malek. It's pretty simple, JESSEMALEK.
Perfect. Well, thank you so much.
Thank you, I appreciate it.